Hello, 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 Tampa Bay listeners. You've got everything PEO, Money Talk 1010 AM. I'm Evan Collard.
I'm Lionel Francis. Welcome, everyone.
Welcome, man. It was a beautiful, sunny Florida day for, I would say, most of that afternoon. Hop in the car, head down to the station. Going to get a radio show going, and the rain jumped on the wagon. So please, as you're listening today, get home safe. We want nothing more for our listeners than to return to their families safely. Lionel, what are we getting into today?
There's a few things we're going to get into today. Right now, we're going to go back and talk about our guest we had last week, Mason Dorner, who visited us with a lot of knowledge for entrepreneurs starting their own business. And there's a few things we took out of that, Evan. And I know you had a few things that you took out of that when we spoke with Dorner here, Mason Dorner. You want to share that with us?
Sure, I'd love to get into it. I think it's always just kind of the absolute normal way to start a show is kind of talk about the best weeks of last. So that best moment for me, Mason, he's an entrepreneurial beast, like Lionel said. He's got a great story. He's been through an awful lot, but even as successful as he's been, he just exited a tech startup with $1 billion exit, scaled that business in 4 years. I mean, just amazing milestones, but still takes that time to invest in himself. He's a business coach, an entrepreneurial coach, but yet he's also receiving coaching for himself and his marriage. To take that time to continue to critique. Being with an entrepreneur is a tough journey, right? Late nights, long trips, it's tough. And so just to stop and make sure everything's dialed in at home, first and foremost, that was refreshing for me.
Yeah. I took a lot out of it as well. And the one thing I did take out of it, the adversities that he went through and how he got through it as an entrepreneur was amazing. And the way he approached it, attacked it. And we talked about that. The way he attacked it. For example, he was going into surgery and his partner was there and he had a conversation with his partner. And the question was, how did we do today? And when he was done with surgery, it was the same question. How did we do today? It was impressive. And the other thing was surrounding yourself with the right people. Becoming an entrepreneur is not easy, but if you could surround yourself with the right people, it helps a lot. So I got that from him a lot, and it was great having him here.
I did. I think we all kind of grew up with that you are who you hang with mentality, at least a lot of us that had that proper upbringing, if you will. And I think it rings home true. It really, really does. And so those were definitely some neat highlights from last week's show. So, but like anything, the show must go on. The page must turn. And we've got a really great hour for you today. First time for the show, right? As we continue to hit these benchmarks, we're just 4 weeks old. We appreciate you listeners interacting with us. We're getting your messages. We're seeing the feedback, and we absolutely love it. First time for the show. We actually have a PEO in studio, the Kymberly Group. Dear friend of mine, Phil Martina, founder of the Kymberly Group. They've now hit 15,000 worksite employees, and truly they are one of the nation's, I would say, best and fastest growing PEOs. We're lucky to have Phil Martina in the studio today. And Phil, what are we going to get into today?
Whatever you guys want. It's really exciting to be here. Thanks for inviting me, guys, and looking forward to it.
Well,
excellent. Good. Excellent.
Well, we have a few questions for you.
Yeah.
So
we do, but we don't want to get into that too fast.
But we'll do it in a few.
Who's up? My turn. Gotcha. Yeah, Phil, I'm excited. Obviously we're just a few weeks in. Hopefully we'll get some folks that can interact with us. That's another nice thing about the rain. I always enjoyed the rain kind of in that sales environment. 2 reasons, right? At the end of the day, you're not on the job site. You're in the office. It's a good time to answer. I think that may ring true in the radio world, right? So they are not walking the dogs in the rain. Hopefully we can get them online today. But that means we need to hear from you guys. 888-404-1010. Give us a shout as we roll through kind of some of today's topics. Anything you got a question on or anything that rings true to you, we'll get into it. But, kind of even before that, I think, everyone kind of, if you've been following the show, we've got to get into at least some kind of a meat and potatoes topic of the day. And today we're going to get into how we work very closely with these agents, not just fulfilling workers' comp needs, but also keeping their books safe, right? How does that happen? I mean, at the end of the day, Lionel, you want to go through it or can I?
No, let's go through it. First of all, Evan and I have had this conversation. We've worked with several agents through the years. And the one thing we want to get across to all the agents is letting them know that we will protect their book of business. We do not accept AORs, BORs. What that is, agent of record. We do not accept it at a PEO.
It's kind of nice, right?
Yeah,
I mean, before that even, we're talking about a moment where that everyday insurance agent, they have a client, or maybe they're trying to obtain that client, and for whatever reason, they can't secure the coverage. Okay, whether that's they're in a state they can't write, or it's a startup, they've had some gaps in coverage, because those will certainly haunt you when you're trying to get that everyday workers' comp policy. Or, of course, that elephant in the room. They've had too many claims. They can't secure the coverage for whatever reason, and you're at this fork in the road. Do I let the state come in and write a policy? You certainly at a surcharge, or do I go down the path of a PEO? And so that's why we really wanted to nail home on this, agents, because we can go through kind of the feature benefit of the PEO and all the things it brings to your client, but rarely do people in this space talk about how it keeps your relationship safe with that business owner. And that's kind of what we want to really make sure everyone identifies today. So Lionel mentioned the AOR, right? I think that's a big one. Everyone in the insurance industry, for the most part, understands that term, agent of record letter or broker of record letter. All right. And what that means ultimately is I'm the agent. I've secured the policy for my client. I've done my job. I got in there. I found them a good solution. They took the coverage. And ultimately, they're getting shopped, whether someone else is banging their door down or, again, maybe somewhere they had to go and you couldn't do it. Whatever the reason is, they've had to kind of open up that Rolodex and entertain another agent, okay? And that agent oftentimes says, hey, I'll be glad to do that for you. First, you have to give me an agent of record letter, give me control of that policy, and then I can go down the path of you really digging in and shopping it for you. I mean, you've done all the work, and then another gentleman or her signs that simple form, and they've controlled all the assets to that policy. That I'm so glad that isn't in our industry.
Yeah, you're right. You're right. Again, our job is to protect you and protect the client and bring them on board. But we also want to let you know, PEO should be the next thing that's discussed when it comes to bringing a client on board. Okay, it should be the number 2 thing, 1 and 2. Okay. Because if you're not the one who's presenting this other option, this PEO option, another agent will. And our fear is if that agent does present this PEO option and take that client away from you, your concern is now what happens after renewal? What happens after renewal? We always see, Evan. After the renewals, they're now looking to shop the other lines of business that you have.
Yeah.
Okay.
I mean, let's be real. If they don't identify on the front end, hey, I can only shop your insurance if you give me control through an agent of record, then the narrative usually goes like this. I can't find that solution for you unless I put a combined policy discount in place, right? So if you give me that and all your other lines too, now I've got a carrier that's willing to potentially take you on. It'll get you a little bit of a discount, but I get all your lines now along the way. I mean, it's tough. So that's just one really amazing thing in the PEO space, to be able to work hard, keep your clients happy, and not really have to worry about, an agent of record sliding in there. Slick, are we still on the air? We are. Excellent. I got lightning. I got flash bombs in here, generators going on. But the red light's on, and so the show must go on. We want to hear from you today, guys. 888-404-1010. You got everything PEO on Money Talk. Phil Martina in the studio to talk kind of everything in the world of employment and the business of employment. But we're digging in with the agents first and kind of going through all the ways we help the agent while in the PEO space.
And I think there's a few other things we could talk about. And there's one thing I think we might have missed that we might want to bring up and let them know is the PEO. We only write the workers' comp. That's what we specialize in. That's what we want, is the workers' comp. Sometimes I have these discussions with agents, and their concern is maybe the other lines we might be going after. That's not the case. It's workers' comp. That's all we want.
Yeah, it's pretty simple. If the only thing that gets us out of bed in the morning is to write PEO in the comp line, when putting that business with us, it's a safe outlet, right? I mean, that's kind of a much bigger elephant in the room, so to speak, is not only are you finding a solution for your client, not only are you keeping your relationship with that client safe by not letting that competitor come in and ultimately, shop, woo them away, whatever you want to call it. It's also by keeping us in front of them. A little mini marriage takes place through that onboarding process, right? We've got to get to the service agreement, the apps, whole nother show. But along that way, rapport is built. We're working with the business owner now, hand in hand, collectively with you. You have vet us as a viable alternative. We've done that presentation. They like what they see. They want to move forward. And so, again, now we're building rapport with them. Sometimes they'll say, hey, do you write health insurance? Hey, what about general liability? So not only have you put that business with us, kept your relationship safe, when we get to ask those questions, the first thing we do is refer it right back to you.
Yep.
I mean, it's kind of a no-brainer. I mean, what is safer than that? But on a bigger note, and I think you were just kind of hitting on this, Lionel, there's a big miss in this industry, a massive miss in this industry in the sense that why aren't agents showing a PEO as a viable opportunity on every opportunity?
Mm-hmm.
Okay? Let that business owner make that decision. All right? We can go through, and that's kind of why the show is born, all the ways that the PEOs help the business owner, whether it's through back office, compliance, state and federal payroll taxes, claims, coverage, benefits, employee package plans. Oh, my goodness. I could go for an hour on all that stuff. But they don't. Oftentimes, if their rates are getting surcharged, whether it's a high mod or a consent to rate, for whatever reason, those surcharge comes, and that everyday agent just automatically, their go-to is just to put them in that policy at all costs. Now, times are changing. Over the 20 years in the landscape in this business, this needle has moved a great deal in the sense that more and more agents are working with PEOs now, mm-hmm. but there's still a good percentage of that pie chart mm-hmm. that has not changed with the times. This service offering is not second fiddle. It is not a second-tier option, mm-hmm. not even close. In fact, we're approaching the times, in Florida at least, where nearly 2 out of 3 businesses are securing their workers' comp coverage through this platform.
Yes.
So if that's the case, how can you still not be presenting it as a viable option? All right? Along the way, we can write a lot of stuff, too.
Write a lot. All kinds of lines, things we could do to help them out, okay? We could write health insurance. We could write all types of dental plan, vision plans. There's a lot of things we could offer the client, but if you do not get it in front of them and offer it to them, we'll never know if we could help them out. But I'm telling you right now, someone's going to make that call.
Absolutely.
Someone's going to have that conversation with them, and they're going to give them all the lines of things that we could do to help them out. And our fear is if they take them away from you, you got to worry about your other lines of coverage that you have with them.
We got about 1 minute to break here. Were you trying to jump in down there, Phil?
Just some of the things that, to add to what Lionel was saying, 401ks, there's ancillary products, there's risk management. I mean, everything. There's a lot of things that people don't realize that PEOs do.
Yeah, and we look forward to getting in it over these next couple of segments. But, it's oftentimes treated as that one-size-fits-all. I think that's another big mistake. PEOs, just like carriers, they have risk palettes, right? Some of them want to focus on that white to gray collar risk. Some of them focus on that heavy blue. To think, and Lionel's probably one of the luckiest ones in this space. He is kind of at that PEO that can write anything in that white, blue, and gray risk palette. But really, on the broker side, and certainly working with the Kymberly Group, I've had to forge that relationship through several PEOs. But the reality is, as an agent, you can go to a PEO advisor and ultimately know that if you can't secure the coverage in every risk appetite, there will be a home in the PEO space. Mm-hmm. And that's very quickly how it is not a second-tier option. It is a primary option because you can look at it 2 ways. Saving them money, and oftentimes, as we'll say, I go to the PEO, I save money. I had someone come in the other day, Phil, it was really unique. They said, you can say it like this. You're getting the PEO for free. Saving you $20,000, saving you $5,000, whatever that number is, but you're getting the PEO for free. 888-404-1010. Don't hold back today. We're going to get to Phil here in a minute, but we always come out of that first break and kind of get into what we like to call Save of the Week.
Save of the Week.
It's kind of that crowning moment that Lionel and I had during the week. We're obviously in the PEO business. We're hustling. We're helping business owners. And so we think it's just fitting to have that kind of unique moment of this week, what happened, and I think Lionel's going to kick it in with this week's Save of the Week.
Well, yeah, I had an interesting one, Evan. We had a company out of Canada needing to come into Florida and have a job that they need to start. Well, a few things that we had to take care of.
Just a few, huh?
There's a lot of questions. And let's go through the steps. First question. Are you bringing the employees from Canada here to Florida?
Sure. That's huge, right?
That's
Are they
huge.
compliant?
Are they
They're
compliant?
legal?
Are they legal? That's one of the questions. Second, currency. How are you going to pay your employees?
Yeah.
Okay.
Right? I don't think they're up there in the U.S., right? We got to convert that,
We
get
have
you
to
paid
convert
up.
that,
Makes sense.
And it doesn't fail, as always. They need a certificate and proof of workers' comp within 3 days. So I have to work some magic and make that happen in 3 days. Now, to do that, currency was one of the issues, how we were going to pay the employees. So the first thing we did was try to get that person to open up a bank here in Florida. They got a bank open, put a deposit in that account so we could take care of that issue. We did find out none of the employees from Canada was coming here. They have a separate company in Canada that's staying there. They were going to hire Florida employees. That's a plus.
Makes it
that
easy.
Helped us out. That makes
Easier.
it easy. So we were able to take care of that. So we took care of those two things. And the next step is getting the employees in Florida set up, getting them set up, and working to get them a certificate of workers' comp in a timely fashion. Now, Evan and I have spoke about this several times. If you work with us and we give you a deadline and you want that certificate, we can make that turnaround within 24 or 48 hours, but it all depends on how quick you give us that information back.
Yeah.
And we were able to help them out, get them on board, and get them that certificate they needed before 4 o'clock that Friday, so they could start that job on a Saturday, actually.
Awesome.
So everything worked fine. So, again, PEOs, how do they work?
They
We
work fast and efficient.
And
Fast
and
and-
abroad. We can help people coming from other countries here to Florida and other states and get them set up.
Sure. And just to kind of key on last segment, right? Let's go down that path very quickly before we get to Phil here. You go down that path in the standard market coverage route. Two things normally going to take place. Minimum 1 to 2 weeks in underwriting. Not because it takes that long to get the yes or no, but that yes usually comes with a stipulation of we want to come and do a site visit first. And it just takes time. These folks are busy. You got to schedule it. You got to get out there. Then they got to come back. They got to write up the review. They've got to essentially give their assessment. None of that happens in real time. I think that's an amazing save of the week. I had one very similar, believe it or not. Also Canada. It was about 2 weeks ago. And it was one guy in New York and 6 in Florida, and they wanted group health insurance. Right? And that's just the buying power of a PEO. You join a PEO, and you're automatically getting, the economies of scale play and options available to you that just simply wouldn't be as if you were carving out 6 or 7 folks in the States. So instantly at your fingertips, that's what the PEO is about. I think it's an amazing save of the week.
One-stop shop. That's what I say.
Ow. Well, all right, we're going to get to Phil. I see there is somebody on the board already. We're going to get to you here in just a moment, Diane. 888-404-1010. Phil, you've been waiting so patiently. Thank you. For anyone that missed that first segment, founder of the Kymberly Group, have now hit an amazing benchmark of 15,000 worksite employees. And I've got to say this myself. I would say Kymberly is definitely one of the best and fastest growing PEOs in the country. We're proud to have you here, Phil.
Thank you, Phil.
Thank you.
Please
Thank you,
take this moment and why don't we do a little lap for the listeners who don't know you, and what's that like? You don't wake up one day and answer that classified ad and get in the PEO space. So break that journey down a little bit for us, Phil.
Well, does anyone want to become a PEO owner, PEO broker?
I wouldn't mind. I mean, if it's on the table.
Right. Well, if I go back 20 years, I'd redo it. I stumbled into the industry. I was in staffing for most of my life. Me and my wife met in the staffing industry. We decided to open a company in 1999, still in business today, Infinity Employment Solutions.
Congrats.
Going through. So 5 years in, 2005, 2006, what happens? We hit a little economic disaster, right? And the housing market. So
I remember that quite well.
Right? So grassroots. I'm in the staffing business, right? Who do they cut first out of a warehouse, out of a manufacturing plant? They cut us out, staffing company.
Sure.
So I do grassroots, go to my customers, talk to them. What can we do? We need more business, right? Let's bring all your employees onto our payroll. And they said, well, Phil, I had a couple of them said, Phil, we do that already. We're using a leasing company. And I said, what do you mean you're using a leasing company? That's what I am. I'm a leasing company. And they kind of walked me through the scenario of how PEO works. So I'm thinking going, goodness, something doesn't make sense. I'm doing everything that they told me that they're using a leasing company for. I'm missing the boat here.
And real quick, Phil, let's set the table for any of those listeners that really don't know that hard line difference. You own a staffing company and you own a PEO. Break that down, the true difference in your opinion. I know what they are. But.
Yeah. No, so staffing, right? The employees truly are employees of the staffing company. They are 100% full-blown. We hire them. We direct and control to an extent until they go to the client company. PEO, we enter in the co-employment relationship, right? That's what this is about. They are your employees. You direct them, you hire them, you fire them. We handle the back office stuff for you. Payroll liabilities, garnishments, health insurance, 401ks, any kind of garnishment, anything like that we can help you with.
All right, so is it fair to say a staffing company is actually providing the labor and the PEO is insuring the labor?
Correct.
Is that fair?
Correct. That's a great point.
All right, so you're humming along, housing market collapse. Oh, my God, you're looking in the mirror. You're at that fork in the road that we talk about on the show all the time, and you went down the path of owning a PEO.
Well, went home to my good friend Google, started Googling.
Google, there it is.
Googling what employee leasing was, all the different stuff like that. And in fact, I stumbled across some of your old shows that you used to do.
Oh, please.
So, no, honest to God. So for 2007, so from 2007 to 2008, literally my full concentration was internet, Googling. I bought the Clay Kelly videos. He was on here a couple weeks ago.
Yes.
I did that Clay Kelly. I didn't get to go to his class, but I did watch the videos. And I actually spoke to him. I called him up a couple times because he gives that kind of thing. If you need any help, expertise. So I had a couple questions on my first couple deals with him. And really from there, from there, we ended up, the biggest struggle that we had was I tried to do everything outside my staffing company, right? But I use the economies of scale for workers' compensation, right? I brought our staffing company into one of the big players of the work comp business for PEOs. They took that to get us started. And then from there, I did, again, grassroots. I did what I was used to, knocking on doors myself. I was trying to do everything by myself. There was
Oh, boy.
me in an office in the back room with a phone line, and I was Kymberly Group.
Wow.
And,
Right.
and let me, I got to go back. On the name, right, I lost that one. Kymberly is my wife. So
Smart
won the
man.
battle
Right.
of
Smart.
naming the company.
I see you callers on there. Be patient.
Yep.
We're going to get to you here. Phil, you want to jump in with one? We've got a couple guys holding on the line
Yeah,
now.
yeah.
It's
Come on,
coming
bring it
much
on.
faster than I thought. I've got, what's that? Tom and Tarpon. You're on with Everything PEO.
Hey guys, how's it going?
Very good.
Good.
Good. So I'm a business owner, kind of near Tampa, a little north of Tampa in Tarpon Springs. Every time I bring up going with a PEO, obviously I'm with a standard policy, my agent kind of like dismisses it. Oh, that would cost you more money. Obviously, I don't have any claims. And so he says, well, if you had claims, that would be the route. Just hoping to get y'all to weigh in on that, why he keeps kind of dismissing the thought of even going with a PEO.
Great question. Thank you for the call
All
today,
right.
Tom. Who's taking that one first? Go for it, Phil.
Phil.
I'll jump in a little bit, right? Hey, Tom, how you doing, sir?
Oh, I think he hung up, but go ahead and we'll give him his answer.
Well, my biggest thing is, right, any employer didn't go into business to be an employer, right? They wanted to make a widget, build a building. Who has time for the employment hassles, the employment liability part of it, right? So that's one big thing that you're going to get. You're going to get discounts, risk management, the costs, the pros and cons can outweigh themselves with a PEO. It's just absolutely crazy that agents don't
Embrace it more.
right? I mean, it's we're not a competitor. We should be a solution for them as well, right? So
Absolutely. And Tom, I think one of the biggest mistakes, if I can jump in on this, Phil, is that even the agents do it, but certainly the business owner, okay? They make the biggest mistake of saying, here's what my workers' comp premium is, and I'm evaluating at looking this against a PEO solution, and so I take what their workers' comp plus what their administration fees to do the payroll, I combine those two figures together, and compare it directly against just what my premium was, and I make that comparison. That is the biggest pitfall. You're 2 seconds in. If that's how you're looking at it, you're already, on the wrong path. All right. When adopting a PEO, obviously you take on a lot of things with them, but the three biggest variables, you've got those state and federal payroll taxes that are fixed, and then you've got three variables: what you're paying for workers' comp, what you're paying for your state unemployment tax, and then certainly what you're paying to have your payroll processed and serviced. And if you're not taking those three variables and doing at least a baseline T chart and apples to appling those three variables, automatically you're doing this incorrectly. And what you find oftentimes is, even if you're paying a little more in one of those three, there's a major offset somewhere else. Okay. Another thing, and agents don't really handle this. They secure the policy for the business owner, and that's kind of when they step aside. Well, what does that business owner 9 times out of 10 go do? They still adopt a third-party payroll platform of some degree, whether it's a Paychex or an ADP type equivalent, or even going to their bank for a simple $10 a week payroll threshold. They're still taking two services, a policy and a third-party payroll administrator. PEO simply puts those two services under one roof, right, to obtain discounts through that economies of place scale. And I think it's a simple no-brainer, right, when you do it the right way.
Well, guests, keep giving us a call. We're here. Everything PEO with Evan and Lionel, and Phil's with us. Give us a call at 888-404-1010. Tom, I also want to mention something myself.
Sure.
I think agents, to be honest, are comfortable with what they're doing. They don't know enough about the PEO to even bother to offer it. They hear about it, but I don't think they take the time to go in and dissect it and figure out exactly what we do. So that's my thing. I think they're comfortable with what they're doing right now, and it's us trying to get that information out there to them to say, listen, you got to look at this. This cannot be your third, fourth, fifth option, or when you think you're about to lose this client that you want to run to a PEO. You need to bring us in the forefront from the beginning.
Yeah.
From every time you have a client, to give them an option, a 1 and 2 option, and let them decide what they want to do.
Sure. I mean, and there is a little bit of a language gap there. They talk premium, we talk payroll. They send out a binder with ultimately like a bottom line premium owed for an annual basis, and we send out a sheet with a bunch of variables going down the middle. And it's our job to turn those variables into dollars and cents to a point that they can understand it. Hence that simple T chart, pushing the three variables. Here's what you would pay on your own. Here's what you would pay through the PEO. How do those total out? If by outsourcing you're able to reduce your bottom line, is it worth it to you? That's the $1 million question in this industry.
Yeah.
So,
We
all
got
right.
one
Well,
more call.
yeah, we do have a caller. We only got through one question with Phil, but let's do it. Diana, you're on with Everything PEO.
Hello.
Hey, Diane, how you doing?
Good, thank you.
Thank you for calling in. What questions do you have for Phil today?
Well, I'm in the PEO business. I wanted to know what you thought about the health insurance effect on the PEO business, because if people are complaining about the high cost of workers' comp, there's a way to pay your employees with benefits and kind of skate around the workers' comp end of the, cost by offering health benefits, because health benefits are not.
So you're saying because of the cost of the health benefits right now, you're seeing that there's options with something that could be offered to offset that, in a sense, to try to help these employees and these employers get these employees on board and provide them with something.
Yes.
Okay. So Phil, what do you see that's happening out there? And again, I know we discussed it already with the health benefits, but what are you actually seeing? Because we discussed it on the show last time. Trying to keep employees. They're having a hard time trying to keep employees in the job force. And they want to know, how can I get these employees on board? What can I offer them? What can I do? And we mentioned a few things, but what do you think?
$1 million question, right?
Yeah.
Yeah, it is, and now more than ever, right? With everything that's gone on in this world, right? The health piece, right? Economies of scale. PEOs have the ability to buy Fortune 500 health benefits that can be passed on to employees in smaller groups, right? It can be from 5 to as many as you want, but you have the ability to join a program that some of these large companies, multi-million-dollar companies, are using when you don't have enough employees typically to qualify.
I mean, the buying power is instantaneous.
It just doesn't have to be health insurance. It can be dental insurance. Let me give you some benefits. Let me give you dental insurance. Let me give you teledoc. Let me give you something that you can utilize.
Absolutely.
Oh, yeah.
Absolutely. Yeah, all the ancillary products.
It's just not major medical. There's all kinds of benefits that you can company pay for that will actually offset your costs. If you want to pay somebody the lowest, wage going on the industry standard, and you give them something else to compensate instead to save money, I mean, you can do it.
Yeah,
there's
it could work.
all kinds of things that people like that would compensate for a lower wage.
I think we've got to get Diane in the PEO advocate business. Well, Diane, we've got about 1 minute here before break. You got anything else for Phil, or did we bring that home for you?
I don't have anything else.
Oh, we appreciate it.
Thank you so much for the call, and I think
Thanks, Diane.
Thank you, Diane. I think she hit that home. I think it's easier than ever. There's more services than ever to put a custom benefit package together, and that doesn't mean major health, right? We actually have a link on PEOadvisors.com called Additional Services. You can get on there and get ancillaries and supplementals. It's very simple. It's really just a couple of clicks away, and it's at your fingertips. Nice thing about those, the employer does not have to pay 50%. There's not a participation requirement. It can be direct bill straight to the employees. I mean, you can really, peel that onion specific to what they like.
But you could use it to your advantage as an employer as well, because you could set a precedence. If you're here for 90 days or more, then I might contribute to that portion that you have, to keep the employee on board. If it's costing them $4 a month, $7 a month, and you're just saying, okay, I could do half of it, you've been here over 180 days, that's a plus.
Definitely.
And then if they're there longer and hopefully the economy doing well, everyone's doing well, then you could probably pick up the whole thing.
Do they even run ads anymore, like classified ads, like hiring, benefits available?
No, I haven't seen it.
I think the old Career Builder got rid of that.
Well, Bill, we have one more caller on the line right now. Let's see if we can get to it real quick, but we're going to get back.
Now, let's get to it. David Tanner on the line with Everything PEO. Jump in, my man.
Hey, Dave.
You on the line with Dave? Did we lose you? I did.
You hear me?
There you go,
there he
Dave.
is.
How you doing today?
Just another day
Good,
of
sir. How are
technical
you?
difficulties.
I'm
Sorry
good,
about
good, doing good. You have a question
So
for Phil?
I had a question, and it has two parts, and you hear it a lot among business owners, especially when they're in the construction trades or anything high risk, and it's the importance of the carrier's rating. That's one part of the question, and the other part of the question is, why is it important that a PEO own its own carrier as opposed to a PEO that doesn't own its own carrier?
Wow, man, that's throwing the lunchbox at.
Required. Killing me, man, killing me. Well, the rating issue. Honestly, the A rating, and it makes no sense in the state of Florida, right? I mean, a lot of contracts do require the A rating. However, there's non-rated carriers out there that if a claim happens, there's several things that have to happen before that claim's gonna blow up, right? It would fall back on the owner, the client company, the construction company.
Yeah, I think
Right.
a lot of the carriers stay almost strategically at that non-rated status until they know they're going to, qualify and at least get that B or more. I mean, we all went to school. A C or D just sounds bad, right? So I think there's this strategic moment of literally staying at the non-rated status until they know they're going to get that B plus, rating or better. And AM Best is kind of that bureau that rates this, right? Every kind of industry has that bureau. JD Power rates the cars. AM Best is that group for us on the carrier side. But I know, Dave, it's a hot button. I know Lionel and Southeast and Lion Insurance are certainly have that, and it's great to have that service offering in the industry. But very few, almost singular digits, own their own carrier. So I would say that's a much bigger curveball for Phil. Ever go down that path, Phil, of considering owning it?
Oh goodness, I in a dream world, I would. I mean, it's a great product to have. I mean, I look at Lionel and the options that they have. They own the PEO and they own the carrier. Many options they have.
Absolutely.
But
And there's
it's
some
tough.
stability there. There's no doubt there's some stability there, and you can really ring home with it when you're trying to win over that client, that it kind of sets you above the pack. Great questions, David. I really appreciate you calling Everything PEO today, and we're on
Thank
every
you, sir.
Wednesday at 6. Don't be shy.
Thank you. Thank you.
All right, usually coming out of that second commercial, we've got a quick segment. We call it Everything
Everything.
Relevant. There's so much I want to get in with Phil. I think we're going to shorten it up today.
Okay.
All right, but we found some articles after last week's show. It was just kind of amazing. We had just gone through a show talking about workers' comp exemptions, and then Aaron, kind of one of the co-creators here, helping us with the show every week, dug up these articles. 13 employee workers' comp sting coming out of Tarpon area, another 8-person sting in the Manatee area. We tried to get CFO Jimmy Petronis on, but I would imagine the week of midterms was not a good week for getting him on the show. Hopefully we can do that in the weeks to come. But what's more relevant than 20-plus contractors going down for not properly exempting or thinking that's the tool in lieu of comp? And I think by all means that was the most relevant thing in this past week in the workers' comp space. So we're going to get right back to it, Phil, because we've only got about 10 minutes or so. Talk to me, man. The growth for Kymberly Group over these last few years, it's been impressive. And obviously it doesn't come by accident. So, how has Kymberly had that success? And, quickly tell us how you're differentiating, from that world of PEOs. There's a lot of them out there.
Sure. Well, I appreciate it. Yeah. You and Lionel kind of touched on it, right? Carrier or agents, they're bringing a quote in. Takes a week, 2 weeks. I want to say fast and furious, right? We try to get our referral partners quotes quickly while we're getting it underwritten at the same time. So we are going to find, bits and pieces where 24 to 48 hours, they will have a quote and approval in their hand ready to bring to the client. That's the best thing, right?
I say it all the time. We win in this business in speed.
Yes.
Okay. Cheap payrolls everywhere.
Mm-hmm.
The engine that drives this thing is timely comp placement.
Yeah.
First one to the table, right?
Yeah.
The agent brings it up there, gets that proposal in front of them, fast and furious.
And I think the most important part about that, the information that we gather when we give you that proposal, I don't think we don't go back 4 or 5 times to make corrections. We're getting the information we need the first time to make sure that proposal that's presented to you, we're moving forward with it.
Yep.
So that's
accuracy. Sure.
Yeah, that's huge.
Huge. Phil, it's kind of staying on that. Sometimes I think it's missed with entrepreneurs. Really, I'm always kind of curious with these entrepreneurs where that passion comes from. That the late nights, the digging deep. What's kind of your passion as the PEO owner? Is it educating these clients? Is it helping them keep their insurance, contained and in line, or what kind of what helps get you out of bed in the morning, man?
Oh, goodness. Well, 7 kids, first of all. But no, a little bit of everything, right? Been an entrepreneur, 20-something years now. It's kind of in my blood. Seeing the struggles that business owners are going through, right? It goes back to, I didn't want to have to handle employee liabilities. Now I do it for a living. But a business owner makes a widget, builds a building, whatever they're doing, they don't want to be an employer. So to help them out, what our expertise is, make it simpler for them to really grow their passion, right? So what gets me going is helping business owners, right? We're helping here. We're a partnership when we enter into a relationship with agents, PEO brokers, referral partners, right? It's a partnership. It's not just a transaction.
Definitely, it's a 2-pronged relationship there, right? You got to massage that relationship with the business owner, but they buy from you if they like you and they trust you, and that starts with that agent stepping forward and saying, this is the path we need to go down.
Yeah. How does it make you feel? Also, as a gateway for small business owners, having access to Fortune 500 benefits that. You're still surprised that agents still do not recommend PEOs. It's not the first line to mention PEOs.
It should be, in my opinion, right? I think every business owner should be exposed to the PEO world. It just gives you so many different options. When you're a new business owner, you don't know which way's up sometimes, right? And if you have, the experts in your corner that are going to help you with compliance issues, workers' compensation, risk management, benefits, the ancillary, the master health plan. We're here. We're becoming your back office. We're your human resource department to help small businesses grow. I mean, again, no business owner goes in and says, I want to be an employer.
Yeah.
I want to be a business owner. I want to make something.
Yeah. I have another question. It's a doozy, but I've been thinking about this a lot. I've been thinking about it a lot. Several years now, several years, we've been dropping the workers' comp rates. Okay. And now we're coming into the new year. And I want your thoughts and feelings about that. And also, if it drops again, how much of an impact will it have on us?
Well, it's been going down year after year. I don't think COVID, the whole pandemic helped either. I think rates are going to go down one more time, a small blip, and then I think we're going to see all the fallout from the prior 3 years. When they're doing the actuarial reviews with NCCI and everything, I think it's going to go up. It's cyclical.
Cyclical.
Yeah,
I do it all the time.
Can't.
Cyclical. Yeah,
I think it's really, at the end of the day, the actuarial tables and the algorithms and the formulas of claims versus premium clearly have been thrown out the window years ago. They had changed some policy where attorneys had a cap on what they could bill. Had no idea that would stop attorneys from taking on these workers' comp claims if they couldn't bill out. They didn't want to take on the claims and the cases. So they reversed that. And then indemnity benefits, that's the wage reimbursement benefit portion of a workers' comp claim that used to cap at only 2 years. They extended that to 5 years. So clearly the payouts are longer, bigger, and yet the claims have gone down, down, down. And the business owner champions this. They're saying, oh my gosh, workers' comp is lowest it's ever been. This is amazing. Of course, they still want it lower, but they feel it and they embrace that. They're excited about it. What they haven't, what they're not realizing is literally this year's rate table. I think is a historic low. I think there's only been one lower rate table I read the other day. It was in the 80s or something, and the rates have gotten so low that it's become a very hard market, and the carriers are leaving the state. I mean, Lionel called me 2 Fridays ago. There was 2 carriers that left the state. I want to say,
yes.
And then it was just about a week after that, and there was another one. And so these carriers are leaving because the rates are so low that it's not profitable for them, right? Which means the business owner has less options. Hence why 2 out of 3 companies are being forced almost to secure the coverage, in this state that way. So, I mean, Phil, we've got about 2 more minutes. If you were able to lay one more nugget on there for these listeners, and anybody that we weren't able to get to today, I apologize. I know the board was lit up a little bit earlier, and we only got 3 lines here in the studio. But if we didn't get you on today, please call next week. Phil, one more nugget in the PEO space. You could talk about Kymberly's goals coming up, or just something that you felt that we really need to ring that bell on that we missed today.
Well, I think I'm going to go along the lines you guys have been kind of preach. I think agents, open your eyes, open your ears, present, give your clients an option. We're here to help, right? One thing that they didn't mention, you're still going to get paid for referring the business to a PO broker, to a PEO, right? So get out there, share it, give them the opportunity. The new companies out there, give them the opportunity to have a great start. That's it.
No, it's key. You've got to really, I'm still surprised every once in a while when I come across a business owner that's hearing of this platform for the first time. I think we're at that point. Everyone's heard of workers' comp, and we're very quickly getting to that point where everyone's at least heard of a PEO. That doesn't mean they know the inner workings, but they're at that point of, what is it? How can it help me? And getting in front of that right advisor is really just so key. Well, man, I've enjoyed it. It goes too fast. I think I need to get on that Schnitt 3-hour-a-week platform. I think we can fill that up, no problem. It's been kind of neat following Schnitt. I've had a couple of people call me like, oh, man, I jumped in the car after work. I threw a Schnitt on. Next thing I know, it's Evan and Lionel on there. So
that's cool.
It's really been cool.
Yeah, no, this is very cool. Thank you, guys. I appreciate it.
Hopefully we can get you back in the weeks to come.
Hopefully you invite me back.
Yeah.
Yeah. Well, we've got some PEOs wanting to get in here and mix it up with us. But this show's for everybody.
Yeah.
The reality is it's not just the PEOs I work with. It's not just Southeast. I mean, this space is kind of raw, new, untapped in this industry, and it's for everyone to take
everything
advantage.
PEO.
That's fitting.
Yes, everything
Fitting.
PEO.
Well, we kind of ran a little late last week and didn't do a good enough job teeing you up for the show this week, Phil, and I don't want to make that same mistake. We've got a really strong guest coming in. His name's Matthew Klinsky. He's a Tampa-based entrepreneur. He's an author, physician, and speaker. His current focus right now is on human capital management within that recruiting and staffing space. You know a little bit about that space, don't you, Phil?
Yes, sir.
Owns several businesses, though. But right now his primary business is kind of that staffing management, and he has a consulting firm where he really helps develop other staffing firms kind of get their roots going and you get that operation up to speed, kind of like Mason last week. That angel investor throws an arm around them, carries them through that whole process. And Matt has really kind of, made it his life's passion to do that. He published a book back in 2020 called Work, Passion, Life Balance. Great read. Kind of describes his philosophy on living that well-balanced life, despite going through the challenges, certainly when an entrepreneur, right? He's literally worked with over 1,000 staffing firms and small businesses and has a good, strong grasp of today's business needs and employment real-life situations. I'm truly honored to have him on the show next week. I think it's going to be a good follow-up to having a staffing PEO owner in studio today.
Yeah.
And
You've mentioned him before. He's part of that EO mastermind.
He is.
Okay.
I'm in a group called EO Tampa, Entrepreneurial Organization. It's actually a global group, 16,000 members globally. And, it's neat. They have a kind of an East Coast, West Coast, and a central division. But he's kind of the Tampa region leader. He brought me in, really threw an arm around me when I was kind of starting that journey of business coaching, masterminding, self-development, all the above. And, kind of like Mason, he's really stuck out and almost become, an inspiration to me. So he's going to be on here next week in studio with us, and I'm just super jazzed up to bring that to our listeners. I really am. So we've got a couple of minutes here.
Well, I'm happy that everyone was able to listen to this show, and I hope you got a lot of things out of it. And again, I think everything we discussed, I hope we got agents listening to what we're saying. We're not enemies. We're just trying to be an extension of you, per se, if you want to say it that way. We're an extension of your company. We're trying to keep your clients happy.
Absolutely. That's all the goal is.
That's the goal. That's the total goal, is make sure we keep them happy and keep them on board. That's it.
Yeah, the narrative is shifting. It is getting to that point. But if you're an agent and you're shopping multiple carriers to find that solution, why would you not take that extra step and shop a couple of PEOs along the way? Mm-hmm. All right, they pay you compensation. They make sure your client's safe, keep your book happy. I mean, we can go through it one more time, but it rings the bell pretty hard, and they only help your client.
If you want to get in depth in conversations, you know where to call. Give us a call. We'll have
That's
that
everything PEO. Coming at you every Wednesday at 6 p.m. We're on a 167-hour break.